Bitcoin's $200,000 run is starting now. I'll show you why it will happen faster than anyone could imagine. Everyone thinks they've missed Bitcoin's big move. But what if the real explosion is just getting started? Behind the scenes, major institutions have been rushing back into Bitcoin. Coinbase buyers are paying huge premiums. Exchanges, they're running out of supply. And Michael Saylor just gave the boldest prediction yet.
Winter's not coming back. We're past that. We're past that phase. If Bitcoin's not going to zero, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The cabinet supports Bitcoin. Scott Bessent supports Bitcoin.
This is how I've always felt my entire life. It's either going to go to zero or it's going to be the world reserve currency that everyone prices their Coca-Colas in. Now, add billions in corporate cash and fresh ETFs lining up, and you got a historic supply squeeze ready to ignite Bitcoin's explosive next leg up. Stick around, ladies and gentlemen, because what you do next could change your financial future forever. Right now, US buyers are quietly flooding back into Bitcoin. Not so quiet if you're watching this channel and you subscribe to the channel, of course you know that, but most people, it's quiet. Coinbase's Bitcoin price premium, the extra cost American buyers pay compared to Binance, is now at levels we haven't seen since February. At one point, the premium spiked to $109.55, showing a surge of fresh US interest. The wave of activity goes far beyond retail buyers. There's a much larger shift unfolding beneath the surface. Bitcoin reserves on spot exchanges have plummeted by over 550,000 Bitcoin in less than a year. And to put that in context, that's almost Saylor's entire stack. It's not even that entire stack, but it's almost that. Historically, when Bitcoin leaves exchanges at this scale, it means it's being locked up for long-term holding. But here's the main catalyst that most people aren't seeing clearly. Bitcoin's market structure has fundamentally changed. In previous cycles, we relied on retail investors and crypto enthusiasts to push us into price discovery. Now, multi-billion-dollar corporations and institutions are leading the charge, permanently taking coins off the market and storing them in corporate treasuries. This subtle yet seismic difference will only amplify the inevitable supply squeeze. I don't make the rules, guys. It's just basic math. But we'll get to that in a second. For now, think about this. Every Bitcoin that MicroStrategy, Metaplanet, or any other on the long list of giants that I showed you on Monday's show, this locks away circulation and is effectively gone forever. If you haven't seen that video yet, I recommend checking it out after this one. I'll add a screen at the end to make it easier for you guys to access it, but you don't want to miss this one, so let's keep going. Unlike retail, who might sell after a quick profit, these corporate giants have multi-year, actually more like multi-decade holding periods. They play the long game. That's why I've been begging you guys to do so also. I really feel I need to hammer this point home so you guys get it. We've never seen this before. Never. I've never seen this in my life, my 13 years in this industry. The supply crisis is happening right now, and it could be orders of magnitude more intense than anything we've seen or experienced in Bitcoin's entire history. It will be more intense. I'm just telling you that now. If this trend continues, which it will, the explosive price moves we're used to seeing will pale in comparison to what's coming next. Another interesting trend I'm noticing is that Bitcoin futures funding rates just flipped negative, a clear signal that the majority of traders are betting on lower prices. Now, normally, you think this means the market is bearish, but let me explain why that can quickly change and why it can lead to explosive upside when it does. Here's how it works. When most traders short Bitcoin, they're essentially borrowing coins to sell, hoping prices fall, then buy back cheaper when they do, profiting the difference. But if Bitcoin's price moves up, even slightly, these shorts are forced to buy back their positions at a loss, triggering what's known as a short squeeze. Prices spike violently upward, and suddenly short sellers, or the people betting against Bitcoin, are forced into becoming the biggest buyers. The situation right now is especially potent. Bitcoin has just spent a full 30 days holding firm above the $100,000 level, an unprecedented psychological milestone. Shorts keep building, expecting a price drop, while fundamentals like institutional buying and declining exchange reserves are quietly fueling a very different setup on closer inspection. In previous bull markets, negative funding rates at critical price points sparked explosive price moves. This time around, with corporate buyers aggressively locking away supply, calling the squeeze potential big is a massive understatement. Check out this report from 10x Research. They recently highlighted a critical chart showing Bitcoin held on exchanges is rapidly declining, directly correlating with Bitcoin's historic rallies. It suggests we're on the verge of another huge market-defining rally. When the broader market recognizes that this shrinking supply is now locked away for the long term, what do you think happens? Those who understand this early get to position themselves ahead of one of the most dramatic repricing events in Bitcoin's history. Giga Chad Michael Saylor, one of Bitcoin's most influential voices, just made one of his boldest predictions yet on Bloomberg TV. He laid it out clearly. If Bitcoin's not going to zero, it's going to $1 million. Check this out.
The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers. That's the miners. At this level, that works out to about $50 million of Bitcoin available for sale every day. If that $50 million is bought, then the price has got to move up to find any seller that's price sensitive. Now, if you do the math, you'll actually see the Bitcoin treasury companies by themselves are buying the entire natural supply.
Yeah. BlackRock
and the ETFs are buying another measure of that. And we've got nation state actors coming into the space. So I think when Bitcoin rallies, if it surges to 500,000 or $1 million, then maybe we could talk about it crashing down by $200,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump media organization announcing $2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher.
Saylor laid out the math clearly. Bitcoin's daily supply from miners has shrunk to roughly 450 Bitcoin per day. It's around $50 million at current prices. Major corporate treasury companies, ETF issuers, and even nation states are now competing fiercely for that small pool of available coins. To put this in context, just one corporate purchase or a single ETF inflow is enough to completely absorb Bitcoin's daily supply. And often these things happen in parallel, not just one or the other. This has been happening every single day for months. And personally, I don't think this stops anytime soon. The moment this realization sets in, prices will have no choice but to skyrocket. When demand keeps growing, and there just aren't enough coins to go around, hitting Saylor's $1 million mark becomes a matter of simple math. So now you're probably asking, but Kyle, surely this has to slow down at some point, right? I don't think so. In fact, quite the opposite. Here's proof. Major corporations like these are building war chests to FOMO into Bitcoin. For context, just 6 of them on the growing list plan to raise $76 billion. Consider this. Metaplanet alone just announced a record-breaking $5.4 billion equity raise to accumulate Bitcoin, targeting an astonishing 210,000 Bitcoin by 2027. And if you think that's ambitious, remember, this is part of a broader trend. Corporations are done experimenting with Bitcoin. They're competing to secure their share of a finite asset. What happens next is obvious. As corporate treasuries hoard Bitcoin long-term, the available supply on exchanges will become even tighter. This is a scenario the Bitcoin market has never faced before. Game Theory 101. And it's something I've been saying for years now. The supply crunch is finally here, and it's playing out right before our eyes. And guys, I talk to you often in my day-to-day life as a VC many other players who are looking at acquiring crypto and Bitcoin treasury strategies. It's becoming like wildfire. The era of institutions just dipping their toes into Bitcoin, it's over. Officially done. BlackRock's Bybit ETF just obliterated the record. The fastest ETF to reach $70 billion under management, all in only 341 days, 5 times faster than the previous record set by Gold's largest ETF. Why is this so important? Because ETFs represent massive institutional money, pension funds, endowments, and sovereign wealth funds, all finally gaining exposure to the hardest asset on the planet. If ETF inflows continue even remotely near their current pace, the resulting supply squeeze means the next Bitcoin rally could easily eclipse anything we've ever witnessed. I remember when the first Bitcoin ETF dropped. Everyone thought the news was priced in, but the market exploded anyway. It just goes to show, in crypto, nobody is ever really prepared for the real upside. Another major catalyst could dramatically accelerate crypto adoption this week: the Genius Act. The US Senate will soon vote on making stablecoins an official part of the US financial system. Here's why this matters. This legislation will unlock a flood of institutional capital into stablecoins, strengthening the bridge between crypto and TradFi. Regulators have given a clear green light for major banks and institutions to start moving capital using stablecoins as their entry point. If this law passes, stablecoins could move from the sidelines and become a central part of the US financial system. And when stablecoins thrive, Bitcoin and the broader crypto market directly benefits, dramatically increasing liquidity, adoption, and institutional investment. Now, someone just needs to tell my landlord to please accept stablecoins too, so I don't have to do these dumb wire transfers. Anyway, while everyone's been watching Bitcoin, something massive has been happening quietly in the altcoin market. This is really important, especially with Solana. The SEC recently took a major step, fast-tracking the approval process for spot Solana ETFs by asking issuers like Fidelity, Grayscale, and VanEck to quickly update their filings. According to Bloomberg's ETF analyst Eric Balkunas, Solana ETFs could see final approval as soon as July of this year, months ahead of schedule. Why is this important? Well, the launch of a Solana spot ETF will open the gates for institutional investors who have long waited for a regulated way to gain direct exposure to high-performance blockchain assets beyond Bitcoin and Ethereum. And here's the crucial difference. Solana doesn't have the large institutional ownership or existing ETF supply overhang that Bitcoin and Ethereum had, meaning the moment the Solana ETF is approved, it could instantly trigger explosive demand and substantial inflows. When the Bitcoin and Ethereum ETFs launched, both assets faced what's known as the Grayscale overhang. Grayscale held a massive supply of each asset, but charged their clients higher fees than the new ETFs. So investors rushed to sell out of Grayscale, which actually weighed on the prices of Bitcoin and Ethereum for months. But with Solana, Grayscale holds almost nothing. There's no supply overhang to worry about. So the moment an ETF launches, all that new institutional demand hits a clean slate. Consider Grayscale's current holdings, Bitcoin at 29 billion and Ethereum at 10 billion, and Solana at just 83 million. Without an ETF yet, that tiny fraction demonstrates just how enormous the growth potential is for Solana when institutional money finally floods in. Analysts now predict that Solana will become the centerpiece of institutional altcoin portfolios, establishing a clear narrative. Invest in the index for blockchain app innovation. This shift sets the stage for what insiders are already calling, now get this, Altcoin ETF summer. Let that sink in for a minute. Where institutional capital accelerates the altcoin market to new, previously unimagined highs. But here's where the narrative gets even bigger. Because if you're looking for real upside, everyone sees the first wave, but the sharpest players are already focused on the next big move. Every cycle, the biggest wins go to those who position early, before the crowd piles in. So if Solana is opening shot, the frontrunners could be XRP and SUI, both now moving into ETF spotlight. Just this week, SUI hit major milestone. Nasdaq filed official 19B4 application with the SEC to list 21 shares SUI ETF, formally kicking off the regulatory review process. This is the same process that ignited institutional demand in Bitcoin, Ethereum, and now Solana. It's the starting gun for the next ETF narrative, and most of the market isn't even watching it. When the ETFs finally launch, the ensuing demand could easily eclipse previous altcoin cycles. Institutional investors will be adding these assets into long-term allocation strategies. This fundamental shift from short-term, retail-driven hype to long-term institutional accumulation could supercharge altcoin valuations overnight, marking the beginning of a new era for altcoins. Remember, this is all institutional demand. If you look at search terms for Bitcoin and altcoins, it's still, retail's not even here yet still. I mean, you guys are. Congratulations, but most aren't. Look, it's easy to get caught up in short-term volatility, especially when funding rates turn negative and traders are piling into shorts. But look closer. Institutional buyers, corporate treasuries, ETFs, and even nation states are hoarding Bitcoin at unprecedented levels. This is a fundamental shift. So here's my game plan to navigate this market. 1, ignore the noise. Follow the smart money. Watch the Coinbase premium and ETF inflows closely. If you go check out CryptoQuant or Eric Balkunas on X, these indicators tell you where real institutional money is moving, quietly building positions while the retail crowd stays distracted by short-term trades. Keep an eye on large corporate treasury announcements like Metaplanet's massive $5.4 billion raise to go buy Bitcoin. 2, position for the altcoin ETF summer. With Solana ETFs nearing their approval, there's an enormous catalyst brewing. The SEC's accelerated approval timeline suggests imminent institutional buying pressure. Solana doesn't have the supply overhang BTC or ETH had, making this an immediate, explosive opportunity to capitalize on institutional inflows into altcoins. Solana is getting a lot of attention, but SUI and XRP are also leading the ETF pack. Getting positioned early for this next wave of altcoin ETFs puts you in line for the biggest upside of the cycle. 3, use stablecoins strategically. The Genius stablecoin bill could reshape the entire crypto landscape in the United States. Circle's IPO underscores just how critical stablecoins will be in the next phase of crypto adoption. Be strategic. Keep a portion of your portfolio in stablecoins to capture yield, remain liquid, and be ready to capitalize quickly on buying opportunities. And if you're subscribed to the channel, we will let you know when we see those golden opportunities. 4, never underestimate the supply squeeze. Bitcoin exchange reserves are dropping sharply, now over 550,000 Bitcoin in less than a year. With companies and ETFs locking away massive chunks of available supply, even minor surges in demand could spark exponential price rallies. Stay positioned. Supply scarcity will drive the next big price moves. We're standing at the edge of what might be the greatest opportunity this crypto cycle offers. While short-term traders gamble on pullbacks, institutions, corporations, and governments are making decisive moves, buying Bitcoin, approving ETFs, and reshaping the very foundation of crypto markets. This is all happening in America. That's why I came back. And we are on the cusp of one of the biggest crypto bull runs you have ever seen. This is all happening without retail being here. Wait till they FOMO in, and it's going to come. So while it might feel like you've maybe missed some of the best opportunities, I promise you, we're still very early. And we're about to enter that parabolic stage of the bull run where everyone gets really, really rich. So get excited. You've been here for a long time. If you've been a subscriber to the channel, you've been with me for a while. We've gone through pain. We've gone through suffering. We've gone through a bear market. And now we might get to reap the rewards of everything we're doing. If you found value from the video, make sure that you do me a favor. It costs you nothing and it helps the channel. Hit that like button. If you're new to the channel, my name is Kyle. I've been in crypto for 13 years. My goal here is to keep you ahead of the market so that you can absolutely crush it, this bull market, and protect your wealth as well. And remember, guys, always stay sharp. Keep stacking your sats, your Ethereum, a little Solana, a little XRP. We're getting there, guys. I'll see you on the next one. See ya.